All right, the highlight today had a lot to do with a big number that came out. On this particular day, it was CPI. Everybody's watching CPI because it's inflationary data. And if it's expected to come out at 8.1, which it was, and it comes out 8.3 year over year, that's a bearish miss for both stocks and bonds because it makes the Fed more hawkish. When the Fed is more hawkish, they have to raise rates. And when you raise interest rates up, stocks don't like that and knee jerk lower. So they broke about 85 points. That's a huge move after the release. There were some month over month figures within this report that also missed to the upside, which were bearish for stocks and bonds. So we broke. But what's important about any kind of number that comes out that's big enough to move us, or a surprise event that's big enough to move us, is to write down where the heck we are right before the sell-off. And in the S&P's case, it was around 3150. 3150 is where price was. So the first, if it comes all the way back, which it was doing after the open, 3150 is going to be initial resistance. And then when it gets above 3150, it's bullish above that price. It becomes a very real-time pivotal price because right before the market knew this report, here's where it was priced. Then the market gets this report. It sells off a lot, but then within an hour or so, it comes all the way back. How bearish is the market if it can't stay underwater with a bearish report and a bearish move? It's a beach ball underwater, but it's a clue that the market's got some underlying strength in it. And so if you look at this, the replay I'm going to show you is an iceberg help qualifying where we were going to get a breakout. And I want you just to see this red line. That's a red sell iceberg who's done 606 and showing one. We generally are going to use that as a magnet and a breakout. But when we get up there, you could see our iceberg is just more sell orders than meets the eye. The guy's only showing one contract, but he's done 606. He has a lot more to do. What's important is what you're going to see is the market right there. Let me back it up. Has 999 it's done so far. It rotates down a little bit. I point to here because at this moment, there's too many longs to play the breakout. But when we rotate back down, what happens? Another iceberg appears on the buy side. That's enough to say we're going to take this out. And anybody who's short, who's leaning on this big order, is going to be the ones chasing. And you see us pop and chase. And the reason why markets go up and break out and rally quickly is because a bunch of shorts are saying holy shit and are trying to chase with buy orders, in this case, to the upside. All right. Then another thing happens. Another iceberg comes in, all right, which creates temporary top, but an iceberg is a magnet, and we're going to break out through that. Let me back it up and show you why this was a qualifier, that the when moment. When are we going to break out? And you could see the amount of shorts. These are these red bars right in here. When people are short, they're buyers. And when I say they're leaning on a big sell order, shorts lean on sell orders. Why? Because shorts are buyers. And who do you have to go to buy it? Sellers. So shorts lean on sell orders. When the sell order goes, their lean is gone and they fall over. Just think of yourself leaning on a wall. That wall falls over, so do you. And in this case, it's the market popping in a breakout above that certain moment, which we get at 14 3/4 with this iceberg. So it's not just identifying icebergs, but it's knowing what to do with them and how to trade them. And they often become great when moments in the market. So then what happens? The market rallies. Let me back it up from this 14-15 area. Where do you think it goes? And when it gets there, it stops 3150. It's not coincidental that by marking ground zero, where a market's price was before a big event, in this case, it was a scheduled number, CPI 730 Central, and we broke 85 handles. There's no coincidence that it stopped there, at least temporarily, as overhead resistance. So make sure you understand when a market moving event happens, whether it's a scheduled number or some surprise tape bomb, as we call them, hits, you got to know where that price left from. And if it takes back 100%, how, in this case, bearish could the market be if we can't even hold underwater from a pretty bearish CPI release, which at this point in time is almost all the market's looking at? Because in order to fight inflation, the central bank has to raise rates, which we know they're doing, but at what pace? And if they get more hawkish, which is a word for a central bank raising rates faster, the more hawkish the central bank becomes, the more bearish stocks are going to react to it, because stocks like cheap money, they like free money, they're used to it. And if they start to get squeezed that way, investors start to back away, at least initially. But that doesn't mean we go down forever. You could see some wicked bounces and rallies in this market. So it's important to know that. We're getting kind of the 31 and a half getting breached again. If I go to real time, right into the European close, it comes back down, uses those 31 halves as then subsequent support. So this is an important highlight, because we're always going to have big numbers and big events that move us. And now you could kind of always jot down ground zero as the price that we left from. In today's case, it was 40.31 half in the S&Ps. And then also iceberg, man. If you're not seeing icebergs, there's platforms that show, we show it the best with our stuff, but it's also how to trade them, and the win moments, and the leans, and a chase. All these are high probability, good locations for when to get long, when to get short, when to get out. Those are important questions that almost everybody has when they get into trading, is the win moments. And yet they never find a good enough tool to address that problem. Icebergs and reading order flow this particular way is one of the ways to address those win moments. When you see bigger size than meets the eye, that appears. And just seeing it isn't edge enough alone. You know how to react to it.